Excel accounting practice problem. Record receipt of inventory with bill linked to purchase order or PO. Get ready, because we're about to excel. Here we are in our Excel worksheet. In prior presentations, we put together the worksheet from a blank sheet, now entering transactions into it. If you have access to it, there's two tabs on down below, an example tab and a practice tab. The practice tab starting out where we left off last presentation. Example tab in essence being an answer key. Let's take a look at it now. We're going to be entering a transaction, recording the inventory that we're going to be purchasing on account, increasing inventory, increasing the accounts payable, also increasing the subledger related to the inventory. Now note, as we make a purchase, we might be linking it to a purchase order. A purchase order is a request for inventory, it being a strange form in that unlike other forms in a normal kind of accounting system, there's no transaction, financial transaction that is related to it, because we had not yet received the inventory and we have not yet paid for the inventory at the point in time the purchase order is made. It's different, in other words, than us as an individual purchasing something, say online, where we typically make the payment before we're shipped the items. In this case, a purchase order, the item isn't shipped and we haven't paid for it at the point in time of the purchase order. Therefore, we would track the purchase order but not record a financial transaction to it. If you imagine putting a purchase order into an accounting system, then you can imagine the purchase order being linked to the bill that we would then create once we receive the goods, in this case the guitars, into our warehouse. We count the guitars, we now have the inventory, we now enter the bill. That's when the financial transaction would take place, and we can tie it to creating from the purchase order and also have the internal control of matching what we received to what we requested with the purchase order. So we're just going to go right to basically entering a bill then, because that's the financial transaction. So we're going to go to the practice tab. We need to make some room and do some cleanup work first. Let's first take our ending balances over here and make them into our beginning balances. So I'm going to copy the ending balances, copy, and put them into our beginning balances, pasting them values only 1, 2, 3. I'm going to delete the middle column for the entries so we can enter transactions in there and just look and focus in on the current transactions. We need more room in terms of our journal. I'm going to copy our cells from A to D, copy from A to D, Control C, and then we're going to put that right into the skinny area. We're going to insert, right click, and insert the cells into the skinny. We need another skinny column between D and E, so we're going to take the skinny I. I'm not saying I'm skinny, but the skinny column with the I in it. We're going to copy that and we're going to insert that in column E, selecting column E, right click and insert the copied skinny. So now we got a skinny E and a skinny I. We can hide then the A to E we don't need. So we're going to select those, AE, right click and hide those, not delete them, but hide them. And then we'll do some formatting. So I'm going to format paint this first one, go into the home tab, format paint it. And then we'll take that blue paintbrush with doesn't have any indentations. We want to remove the indentations. Paintbrush it right down. Delete the content. So now we've got a nice fresh pad on the left side. On the right side, we want to make sure that we have our beginning balances over here. So I think we copied over the beginning balances. Now I'm going to delete these middle items so that we can focus in on just our current balances. I think I did that before and then I redid it. So in any case, this is where we're standing at this point in time. So now let's record the transaction straightforward with regards to our actual journal entries, but the subledger is where the difficult item lies in this case. So we're going to say on 222, this would basically be the bill form if you're using accounting software that you could tie to a purchase order. If you have the purchase order, which doesn't have a financial transaction related to it. So we got the inventory is going to be the debit, the credit's going to go to the accounts payable, and that's going to be a straightforward transaction for the bill type of transaction, but we're going to have to populate the bill type of transaction with the inventory items that we want to get from the subledger. We're going to imagine, I'm going to go all the way to the right to get to our inventory subledger. We're going to imagine that we have a new item that we're going to have to add as we do this. So I'm going to go all the way to the right and say we got a new inventory item, which I'm going to put down here on DW27. I'm going to call it an SQ, which is a Squire, I think from the vendor, which would be Fender, the vendor. And this is going to be on 222, new vendor named Fender. So we're going to get 20 of these at 168 at 360. We're imagining that someone came into our shop and say, hey, I would like these Squier guitars from a new vendor Fender. We don't have those. So we're going to say, hey, look, we're going to purchase these for you. We sent the purchase order with the customer linked to it. You can imagine in like an accounting software, even though the vendor doesn't care about who is purchasing, but we can then tie or track the purchase order to the bill. So now when we enter the bill, we can still track that we want to actually turn around and sell these to a particular client or customer who requested these guitars. And now that we enter the bill, we can turn around next time and enter the invoice now that we have the guitars and complete the transaction. So we're going to say then that at the end then, ending inventory is going to be 20, 168, 20 times 168. So let's go all the way back to the left then and populate our transaction all the way back to the left. And I'm going to do this with a formula. This is a little tedious, but we're going to say in H2 equals, I'm going to pull this from that new thing we got on our transaction. You don't have to do this, but it links everything together so you can see how it's all linked together. So it could be beneficial. And so we're going to pick up then the change we had, which was way over here. It's after the ukuleles. Way over here in cell DZ293360, enter. There it is. There's our debit. There's our credit. Let's do some indentation in the alignment group. Indent. Let's post it out now. Post it out. So we got the inventory. Inventory is going to be over here. We are in cell N7 equals. Scrolling over to that 3360, increasing both the year-to-date and the February number. Accounts payable then on down below. Accounts payable is going to be equal to that 3360, increasing both the February and year-to-date numbers. No impact on the income statement because we haven't yet sold the guitars. We're going to sell the guitars when we issue an invoice and a sales receipt, and then the impact will be down here in the form of cost of goods sold, as well as, of course, the revenue. Let's post it to the trusty GL. We'll also have to post it to the subledger for the new vendor, which I believe is Fender, the new vendor. So let's go to the inventory. That's going to be the fourth account. On the trial balance, it's the same on the G to the L. So we're going to go to the inventory. It's down here. I think it's hidden down here. And the date, what did we say the date was? I'm going to say equals so I can find it. 222. 222. And the amount is going to be equal to the amount that we purchased up top, which was 3360. So we had 6266, goes up 3360 to 9626. 9626 matching what's on the trial balance in both the year-to-date and February. Out of balance up top on the GL until we record the other side to the AP, accounts payable. That's the first liability account. First liability account in the general ledger as we post it too. So we're going to go down here and say this happened on 222, and we're in AM17, early in the morning. You got to get up early in the morning. You want to buy these Fender guitars in the AM17. So we're at the 3360. Bringing it up to 3360, that 3360 in the AM matches out what's on the trial balance. We're back in balance with the general ledger. We also need to record it to the subsidiary ledger for the accounts payable for our new vendor, which I believe is named Fender. So we're going to go all the way to the right to the subsidiary ledger, which is supporting the accounts payable, all the way to the right. So there we're out of balance by that 3366. Before we do that, just note that the inventory is back in balance, is now at the 9626, which should match the trial balance. Okay, so we're going to add a new vendor here, which is going to be down here. Let's put it in CH14. We're going to call it Fender. Fender, the new vendor that we bought the Squier guitars from. Date 222 is going to be CI is equal to all the way left until we hit the wall, scrolling up, and then we'll pick up that 3360 and enter. So we have an increase. So we owe Fender 3360, and that's all we owe to anybody. We don't owe anybody anything except for Fender, the new vendor. So there it is. That matches up what's on the trial balance. So 3360 should also be on the trusty TB trial balance. As it is, we're back in balance. We're in balance with the GL. So everything is well. So this is what we have thus far. No impact on the income statement from that transactions. And so that's what we have.